David, I want to throw up a quick chart that looks at this mass exodus from EM, Asia assets in particular. This is just looking at equities, but of course we've seen that familiar refrain when it comes to the bond and FX markets as well. Why are we seeing this bearishness when it comes to emerging markets in Asia, given that so many of them have strong, fundamental, domestically driven stock market stories that you could argue could almost be a bit of a haven given everything that's going on? Is this just a strong dollar story?
Well, I think one is the strong dollar story, especially if there has been borrowing by a country denominated in dollars or tied to dollars. So the payback for the borrower becomes much more expensive. That's one issue. The second issue is if we have a slowing of global growth, at the same time we have internal domestic price pressures from tariffs. The emerging markets suffer the most. The United States is 20 trillion in economic size. Most of it is domestic. Most of it is services. So we have a buffer here. Larger economies have those buffers. Emerging and frontier markets suffer the most in a trade war scenario when it gets to shrinking or reducing the rate of growth. That's what's at risk here.
And David, we certainly see that rift, as you mentioned, between the U.S. and EM with China, especially when it comes to the A-share market. We're just kind of a whisper away from entering into a bear market last week. Let's take a look at a chart that I have here that kind of shows the divergence that we have seen. In fact, U.S. stocks set to outperform China for a 10th month now. And it seems like the market thinks that, given the fact that China's surplus with the U.S., it means that Beijing has more to lose on trade. Do you think markets are right to bet that Trump is going to win in a trade war?
Well, I don't know how markets bet other than speculatively or in a shorter term swing trade, because the outcome of a trade war is not who loses less or more. The framework is everybody loses. Now, the goal of leveling tariffs, eliminating them, reducing or eliminating barriers is a noble one. The question is, how do you get to it? Do you get to it through a negotiation, or do you get through it with rhetoric, with insults sometimes? And with these techniques, we are getting used to the Twitter war, and it's something new for us to contend with in the financial markets worldwide.
What's your feeling that what the US dollar is going to do and how that feeds into the commodities part of the story?
Well, I looked at the interest rate picture, and you look at the G10, and the Treasury yield, the U.S. Treasury yield, is the highest in the G10. Interest rates are driving foreign exchange flows. And we know that in a major central bank system like the European Central Bank, we've extended out this negative rate and borrowing, and we have a very modest, long-term, gradualist approach. So that would suggest the dollar hasn't peaked yet. The cross currents are if we get economic slowdown from trade wars. So this is very difficult. I hate to be so gloomy on this show.